Hey traders from around the world, what's going on? It's me, Jeremy Alexander Newsome with RealLifeTrading.com. I trust you're doing wonderful. Today was really quite an interesting day in the markets, I feel like. And I'll kind of explain why and give you a little bit of a rundown about what happened in the day of the Newsome household. But SPY almost filling this gap down here. The high of this candle, 268.12, the low of today, 268.45. So I still do think that we fill that gap. I've been mentioning that most likely we have a rotation where we do something like this to get back down to these levels, and realistically it's happening. So we did gap up today, and then we started fading pretty much immediately. Here's the 5-minute candle, and the very first 5-minute candle, you'll see a little bit of a bearish candle. You got this bullish candle. Here's the high of the day break, which Apple posted too, and we'll talk about that in a second. I didn't take this or anything, but I can see why someone would have gotten in there bullish and then got stopped out, and then it just sank the rest of the day. So really a very trappy day out in the market for bulls or bears. Overall, though, we obviously ended bearish. Now, we could see that this could easily become an inverted head and shoulders pattern, and why that's very likely and certainly plausible. We cannot take out the low of today in order for that pattern to really be a strong consideration. If we do take out the low of today, it most likely will just fill the gap and we'll trade back down to here. Worst case scenario, maybe making our way down to around 258 and some change and kind of bouncing around there. Here's the 100 simple on a weekly chart, and that's at 258.77. So yeah, I could see us trading back down to 258, and that would be, a good buying spot. And we'll see if we bounce there. I mean, maybe we will, maybe we won't. If we won't, we'll start looking for more of what could happen in the future as far as the bears are concerned. But most likely, I think we could get a little bit of a bounce off that level. And yeah, just getting some volatility, very similar volatility over here. Now, if we really break this down, keep in mind, this is the market. This is the market structure. So don't think it's just insanely weird that any of this is happening and it should not be occurring. Very frequently, the market moves in waves, right? And I would say 2010 to 2012-ish was very, very choppy. So 2 years, and you had 2 years of easy breezy cover girl trading, and then 2 years of very choppy, very sideways movement, and then you had 2 years of pretty simple trading, and then you're going to have probably another 2 years of sideways action where it's pretty choppy and wild, and then most likely will continue higher. Now, of course, we don't have to. We could break down at a support level and really retrace decently hard. And as far as my models are concerned, I'm just saying this new high is all we needed from a wave count perspective to get a bigger, more significant drop. So in the back of my mind, it is something that we should at least be prepared for. You need to start studying and practicing and making sure you're really comfortable at market sell-offs and big bearish moves and bearish trends. Because as far as a wave count is concerned, that particular new high is all we needed to technically get a really big drop. Not saying it's going to happen, and it probably won't, because most markets just slowly continue higher. But yeah, that's, anyway, a little bit of a bearish trinkle in there. So let me talk about the 2 trades I took on the Qs today and lost on both of them. So as far as day trading is concerned, I was down 2.5 Rs from day trading today. I did have some swing trades that actually put me over 3 Rs for the day. And so I ended green on the day, but barely. And I have some paper losses out there as well. So I'll kind of talk about all of those. But right now, here on the Qs, here's what I tried. So here's the 15-minute chart was the first thing that I was looking for, and the 15-minute time frame, and kind of just zoom in. So I looked at it, kind of saw a wave count, like a 1, 2, 3, 4, 5. Well, although that did end up being the exact count, my entry was right below the low of this 15-minute candle, and my stop was right above it. Literally got wicked in and then got wicked out within just a few minutes. So that was kind of lame. And then I said to myself, you know what? Okay, it looks like we're probably bouncing off support. So this low, ginormous candle wick right here, a little bit of a support, the pre-market low, 165.05. So I did try a bullish trade on the Qs, and this was once this new low came in right here. So the low of this candle was 165.10. It made a new low relative to this area. It also made a new low relative to this wick. I was like, you know what? I think that was the trap. So here's a morning star. Morning star candle got placed. Entry was right here, and the stop was right down there. So when I got stopped out, as you can see, it didn't take massively long, but once I got stopped out of there, I was like, okay, truly don't really know and have no real idea what the market's going to do as of the rest of the day. It's just going to be an absolute chop fest, and I'm really not sure. So I packed it in, didn't do any other day trades. The only other day trade that I placed, so those are the two on the Qs. And then here was Wix, WIX. This was a great gap. I loved it. It was a white candle gapping down. Everything about this gap was flawless. Long-term moving averages, below the 200. I mean, just everything. Everything was great. So here's your 3-minute chart. And I could have made money on this trade if I had gotten in a little bit earlier. So I do recognize I was a little slow on the gun, but not massively. Here was the 3-minute time frame, and these two candles right here, a perfect tweezer top. Then you got another nice bullish candle here with an upper shadow, an inside day bullish candle. And my entry should have been right below there with a stop up here. And I would have exited half or a quarter at the low of the day for an R. And then I would have gotten trailed out over here and would have actually ended up winning like 0.7 Rs on the trade. However, I took it, as you kind of can see, my original stop was 88.95. The entry was below the low of these two tweezer bottoms on a 3-minute chart. So entry here, it actually rotated up, broke down, traded sideways, did everything I could want, and then randomly right here just took off to the moon. So I ended up lowering the stop to A720. So I lost small on Wix, like right at half an R, a little less than half an R, but yeah. So today was a losing trade. Not every Wednesday is a Wednesday spell with an I, as far as day trades go. However, I can at least brag on some of our swing trades because this was a day that it worked out. So Procter & Gamble hit our 2R target, actually a little bit more than 2 Rs, 93.70. Got into that trade. I believe that trade triggered in on the 1st. Yeah, I'm pretty sure it was the 1st or the 2nd of the month, one of those 2 months, one of those 2 days. But anyway, Procter & Gamble, a little bit of 2R trade there. And then realistically, I just exited all the other trades. Here is, if I hop over to Slack, to pull up the Slack channel. This is the channel that every trader in the trading rooms get access to. And I posted this message, I believe around 10 a.m. Central, 11 a.m. Eastern. So let me kind of scroll up here. So we should be approaching it soon. There it is. Yep, so 10:01 Central. So hey team, we hit our 2 Rs on our Procter & Gamble's. I'm going to go ahead and lock in our small gains on the rest to reduce risk and see what happens. Therefore, closing KLAC, Whirlpool, and Delta Airlines for small gains. So here's the Real Life Trading Official Swing Trade Journal, and I'll pull that up in just a second. But yeah, that was the trades that we were in as far as officially, swing trades. And yeah, it just did not seem like the market was massively strong at the time. I still don't think it's that strong. I still think there's a little bit of a weakness out there, and I felt like it was a good time to lock in those gains. And we can kind of see, I'll just pull up the original trades. So this was right here. Let me copy and paste this. I could have done this, beforehand and had everything already ready to go. But I was like, you know what? I think people want to see me fumble with the worksheet. That's not it. Why did that not copy? I obviously did not press Command-C. All right, let's try that one. So this was Whirlpool, and I actually liked this entry, 113.14 by 109.14, entering with this double bottom. So here's WHR and Whirlpool. Same entry is still there. And when this thing posted a tweezer top, almost a perfect tweezer top, and again, that general market weakness, hey, we were up on the trade. Sometimes you got to be a little flexible in trading. I was like, okay, it appears to me that this is going to be a good time to get out. So where that blue arrow is showing, that's where we got out of Whirlpool. And then this was the KLAC trade. So KLAC, which I've never traded before. It was a limit buy off of the high of that bearish candle. So if I hop over here, KLAC, same entry and everything is still there. And again, it retested the very next day on KLAC. So this is the daily chart. So this is when we set that trade up, right here, 92.83, and we wanted to get triggered in. So we got triggered in realistically the very next day when it gapped up and then kind of trade down into that support. So exit at the blue arrow on KLAC, and then also on Delta. Let me hop over here to Delta, pop a Delta over DAL, and here is the Delta Airlines setup. This is set up on the hourly chart. Actually got like 5 pennies away from getting stopped out on that trade. So here's Delta, and all this is still here. So the old stop was 54.60. The low of this candle was 54.75. That was like at the day of the dividend payment. So I got real close to getting stopped out. Got triggered in on the 5th and exit again at the top, that little blue arrow on Delta. So again, I just sensed some general market weakness and said, hey, why be in trades if we can lock in profit? They're profitable now. Let's go ahead and take the gains. And that was actually before Wix stopped me out. And what I was looking at that particular point in time was not too bad, about a 3.5R gain on those swing trades. So that was a plus 3.5. I lost 2.5 on the day trade, which puts me at 1R on the day. So still profitable, but thanks to those swing trades, which I have not been able to say that recently, swing trades have been a little bit tough, and I still do have some paper losses out there. So here's Blue Apron, ticker symbol APRN. Blue Apron had terrible earnings. Have a very wide stop on this thing. So what I'm going to do on Blue Apron is actually increase today. I'm increasing the stop on this one, and I'm going to do an add and a reduce for like half an R. So if I lose on Blue Apron, I'm going to lose half an R, most likely on that particular trade. And then Fitbit, I tried it. Doesn't look like it's going to work. This is the first time I've gone bullish on Fitbit in a very long time, and it looks like it's going to come and stop us out, most likely. This one, right, the stop is below all the moving averages on the daily. It was a retest gap. This is the S-curve pulling into the retest. Stop is, or was below all the moving averages on the weekly. You know, we were above the 100 simple. We actually closed above the 100 simple on a weekly chart on Fitbit. And I also like the fact that it made a new low right here, just barely. And I was kind of hoping that this would be a trap for the bears and that the bulls would run higher. But it looks like Fitbit's bearish trend most likely will continue, as I'll probably get stopped out for an R loss on Fitbit. Again, it could still bounce. Haven't got stopped out yet. If we have a really good bullish day or something tomorrow, that could be cool. But most likely Fitbit is going to get stopped out. So yeah, Fitbit is open. Blue Apron, so both those are paper losses. Then AAXN is a bearish swing trade that we got triggered into based on this retest gap. Had this really cute little white candle. Got the good breakdown here with the bearish candle on the 12th, and they got triggered in yesterday. So, you know, will that trade work? I don't know. But the 10 EMA is below our stop now. The hourly chart looks pretty okay. So they got the 50 kind of actually below our, almost below our entry. So if that can work for 2 Rs, and I end up losing less than 2 Rs on Fitbit and Blue Apron, which I'm pretty sure I can lose less than R on Blue Apron, those two will be positive trades. And I also have some puts potentially set up on AMD, which doesn't look like it's going to break down. AMD was actually relatively bullish today. So here's your long-term moving averages. And long-term, we're just kind of hanging out in the middle. So I was looking at potentially a head and shoulders pattern breakdown on AMD, something like this. Boom, boom, boom. But AMD did not break down today. So AMD actually up 6% on the day along with MU. MU closed up a little bit higher. Don't know if that's going to hold strong, but if MU does break below 36.71, I think that'll be the price to start considering some protective puts. And then also Facebook. Facebook actually did end up on the day. My buddy Rhett, who lives in Alabama, asked me a good setup on Facebook. And the setup that I was looking at was 143.35 by 142.65. And I was looking at that at about this particular time. Boom, 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 which never happened. We broke lower, came back in, and then popped out and then ran. And that would have been a nice little 2R trade on Facebook for a late afternoon play. Didn't take that one personally. And yeah, so Facebook actually a little bit up on the day. So that's good because it is at kind of the last ditch effort of support that I can see. As long as Facebook at this point in time, the warning signal would now be an end of day close below 41.43. We closed below that price on Facebook. Some challenges most likely will ensue for the shares, and long term we'll probably end up hitting at least 133.95 if we close below 141.43. Overall, though, I actually like this Morningstar reversal, and I'm going to watch and keep an eye on Facebook tomorrow to see if we can gap above the high of today and actually play that one bullish. So that's my thoughts. A lot of interesting moves out there today. My friends, stay strong, keep it frothy, keep it between the lines. I have no idea what those meetings mean, but all right, folks, you're awesome. I'll see you on Friday, and until then, love life, and trade it. Bye.